You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this right now. Glad so many of you are enjoying not just Vol Views, but all the other programs hitting the network. It's been a slew of content coming your way. You guys clearly have the time and the inclination to listen, so we're glad you guys are enjoying it. If you like what you hear, make sure you keep leaving those reviews on wherever platform you get this show so that others can continue to discover this fine program and indeed this fine network, because these are the times that people need it. So we like to make sure it's getting out there to all the new folks, and we're glad to see so many of you are discovering the content these days. And of course, wherever you listen, make sure you leave those comments, or those questions. We do love to hear from you guys directly as well. Just don't leave them in the review platform. Don't leave a question in like iTunes, because we won't see it in time. Guaranteed out there. All right, and joining me on the program today, first off, let's go out to, well, normally he's in the hinterlands of Chicago. These days he's out, I believe, in the hinterlands of Detroit, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmeline Capital. Mr. Meatball, welcome back to the program. How are you faring amidst all the madness that has engulfed Chicago and I guess Detroit of late as well?
Yeah, I mean, there's definitely a lot going on, and this is where what we do at the Greenwood Project, you get kind of real, you get a real first person, telling of what they're actually dealing with in those communities. And, it's been a week that, I think, will go down for, hopefully some extremely positive, changes, and, like a phoenix rising out of what has been terrible news. And, so that's kind of what I've been talking to. I spent the last week giving, daily, I spent to about 40 or 50, college kids from the South and West Side, going through, how the stock market really works, an hour a day. And then, the last 2 days I went an hour and a half, and then almost 2 hours. And, at the end, I had them give me some stock picks, and lo and behold, their ideas were really good. So, it's been a week, but I got to say, I see a light at the end of that tunnel, not a wall.
Yeah, it has been an interesting week. Obviously, it started off pretty poorly here, at least in Chicago, where they destroyed pretty much the entirety of the Loop and River North area. In fact, as I've said on the show many times, or on the network, I should say many times, we still have National Guard right out front of this building, actually. And I do believe there are more protests planned to head this way later this afternoon. Hopefully later, it seems like the later rounds of protests have stayed mostly peaceful, which is a good thing. You don't want the message to get diluted by the violence. By the way, my earlier analogy of it seemed like when it all was popping off last weekend and it was in the midst of just the chaos and the burning and everything else. My analogy was it seemed like when they were filming the Dark Knight movie here about a decade ago, because the Joker's goons were running around burning the city and the helicopters were burning and everything like that. And I didn't know how right I was because they arrested one of the people who torched one of the cop cars there, and he had a Joker mask on. So I guess they were reliving a little bit of the Dark Knight over there. Let's hope everything stays more peaceful again going forward. Let's head on out now to the MIAX hot seat, where we are joined once again. It's been a while since he's joined us by Mr. John SMOLLEN, the Executive Vice President over there and the Head of Exchange Traded Products and Strategic Relations. That's a mouthful of business card there, but I like it. John, welcome back to Volatility Views, sir.
Yeah, thank you, guys. Excited to be back. Certainly a different world since the last time we spoke, and we'll see where it goes, but always an exciting day.
Yeah, catch us up really quickly, because we haven't talked to you in a while, and I'm not sure if you saw it outside your window, but the world has pretty much fallen apart since the last time you were on the show. There's a little thing called the global pandemic that's been wreaking havoc out there. Now, of course, it has transformed into this wave of civil unrest and everything else, so a lot has happened since the last time you joined us. Maybe catch us up. How are you doing? Where are you hanging your hat these days? And how are things been for you and your family since the last time we chatted?
No, I appreciate that. So, I live right outside of Princeton, and in the state of New Jersey, where, the pandemic has set up a pretty serious front line of attack. The state has dealt with it aggressively. Princeton as the area has been relatively safe, I think, during the whole pandemic since the 9th forward, March 9th, which is when MIAX aggressively went to a work from home policy. But it's around. It's here. That where I live is a very, very in addition, outside of Princeton, there are some very, very significant over 55 communities that, in the day where it was probably a good spot to build. And you see, they've been impacted pretty hard from what's went on. But, MIAX has done well. Me personally, I'm like anyone else. I read the papers. I react to the negative and the positive stories. Obviously, I follow the stock market. I'm still a trader at heart. So again, and then like any person that lives in America, you're impacted by what's going on. And I'm not qualified to lead the country in a direction, but I just pray that we come together as a nation and we have to move forward as a country. It can't be siloed. We go forward or we go back, but it's together.
Well said, sir. Now let's go forward with the show, right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the volatility, the trading, the trending, the analysis, the unusual activity, the developments that have been going on today and indeed for the past week. And like I've said every episode for the better part of the last quarter, It's yet another crazy and or historic and or just unprecedented week. I guess just hit record and hit play every week now, because that's pretty much what the show is every week, listeners. We're coming into today. The market, we've been talking for a while, has been rallying like it had this news already. But now we finally received the news that the market seems like it's been pricing in all along, which is just an explosive end to the week from a jobless claims numbers. Economists out there surveyed by Bloomberg had expected 8 million jobs to be lost last month, following nearly 21 million in April. Instead, gaining 2.5 million jobs. They're calling it the biggest miss, the biggest surprise in the history of since this data has been populated. It kind of just shows how unprecedented and rarefied this environment is, where they could be off by over 10 million jobs. That just shows how difficult the prognostication is, because no one really has a handle on what the hell is going on, particularly on where the rubber meets the road end of the economy, the small businesses and the little corner shops and things that have suffered the most as a result of this pandemic. And now, of course, the unrest and everything else that's going on out there. So 2.5 million jobs being added in May. Unemployment down from threatening that 20% level not too long ago to 13.3. So those are the numbers the street has been acting like we had for a long time, but now we finally have them. And so, yep, we're off to the races yet again. The Dow up over 3%, about 3.33%. The S&P up about 2.75%. The Nasdaq surprisingly complacent, only up a little north of 2%. And then we've got VIX cash and spikes, both of them looking pretty good for the Rock Lobster's prediction last week. He was the lone naysayer to the downside that I do believe Mr. Rhodes just punted and said, I'm going to pick 30 again because it's been hanging out at 30 for a while. It doesn't seem to want to move. And that looked good until it didn't, until really the numbers came in today to kind of cement it. We were steadily moving away from that strike, but then today's numbers really put the icing on the cake. So we're about a 24.5 or so in the VIX cash. That puts us down about over 5 handles, about 5.5 handles. Similar level out there in Spike's land, about 24.5, 24.60. It puts us down about 5.5 handles out there as well. So both of them coming off firmly. We were wondering for a while, what will it take to get us to move off of the 30 strike? Well, it was these unprecedented jobless numbers here in the U.S. So yeah, that's what it took to really move us categorically away from that 30 strike. Will we hang out here? I guess we'll find out at the end of the show when we do our prognostication. But for now, it seems like 30, at least in the rearview mirror, for the time being. Let's go back around the horn, the opposite of the way we came. Let's start in the MIAX hot seat. John, anything catching your eye out there from a vol space? Have at it. And also, I know you guys just posted your numbers over there for May for MIAX. And kind of spoiler alert, a decent month. If you want to break down some highlights from there as well, have at it, sir.
I think some things, we're still waiting for, final ruling on our futures products. So that is being handled in Washington, as I'm sure Tom and Shelley have spoken about in recent shows. We're fingers crossed and waiting. And that's a big thing for us, that once the futures product is up and running, we expect the options markets to move. But, things that we're seeing a trend into a significant higher numbers of trading in the SPY, and I don't know if it's the challenges that the CBOE will ultimately overcome in some form of how do you get complex, large block, large risk trades, onto a screen and onto a platform. And I think a lot of people have opted to move into the SPY. And to be honest with you, as someone that has traded the market, the last several months through the SPY, the markets in SPY have been phenomenal. And the numbers are showing that SPY and the trading and the notional in there are pretty exciting. And I think for us long term, because of spikes being built off SPY, we're very, very excited about that trend. We think it's good. We think it's good for the market. And then it seems that, I saw some comments recently about some high-end, sophisticated retail trading coming back to the market. I don't think that's going to go away. I still think, as you get later on in the show talking about, what the overall direction of the market is. Obviously today is, everyone's birthdays came true today. But there's the hangover, and the hangover will come in the coming months, and the market will ultimately go down. So we like where we are.
Yeah, you guys have been putting up some paper. The newly wealthy Flowmaster was sitting in the hot seat a couple of weeks ago there, the MIAX hot seat, and he broke down a pretty sizable condor you guys put up out there as well. I think it was XLE, XLF, I forgot which, 400+ thousand contracts. So you guys certainly have been attracting the size paper out there, sounds like in SPY as well, which has been interesting to watch out there. Speaking of watching things, Mr. Meatball, sir, what's been lighting up your tape out there? And I would love to hear your lecture someday about explaining the market to these kids right now, because certainly for the last month, this market has made less sense to me than it ever has. Maybe I should sit in on your lecture, too. You could explain it to me as well, sir. What do you think?
Well, I mean, it's just because you think the market should do something doesn't mean it will. And, what I tried to explain was that, if we were a year ago and what was happening, it would have driven the VIX to 20, and markets would have been off several percentage points. Instead, we're coming off kind of a historic face punch, and vol being in the 80s. So even as bad as everything looks, a lot of the fear and has been already kind of pre-priced, and that's kind of why the market was behaving the way it's behaving. And really, what's been fun is explaining to the kids, okay, how do the brokerage firms actually make money? How do exchanges work? How does your order move? What's happening with, what are indexes and why do they exist? And why is the SPX acting the way it's acting right now? And, or SPY, it's been, it's fun. It's like painting with a blank canvas, and that is the part that I think is really fun and interesting. And, I think the big lesson that we all that I was trying to impress upon them is that when their friends are buying a product, you buy the stock. And when their friends then go and buy the stock, you sell it to them. And that was kind of their big aha moment. And then also, when everyone says you should, when everyone says that things are at their worst, that's when there could be opportunities. So a young lady was explaining to me that she had bought Boeing and the airlines on the lows, and then when Warren Buffett sold them, she made the decision to sell her airlines but kept Boeing. And I said, well, good job, young lady. Way to face fear and trade through it. To John's point on markets, I think that there's a lot to unwind with SPX and VIX. Believe it or not, I don't know that anybody could be rooting for, and this is so counterintuitive to what we normally think. I don't know that anybody is rooting for the VIX to go back to 15 more than the SIBO so that people will be able to use it as a hedging product again. Same thing with spikes, right? MIAX, as they bring that future on, the MIAX people are actually, they won't say it, they'll never admit it, but they're rooting for the VIX and the spikes to go back to 15 or 14 and 13, because then they become a viable hedging product again. When the VIX is at 80, the only thing, and the spikes is at 80, the only thing they're good for is hedging a short position. You hedge short position with short vol, and that's the only thing they're good for. You can't use them as a downside hedge anymore because vol's already 80%. Prior to a move, there's no better hedge than a vol product. After a move, vol products kind of lose a lot of their thunder. And so, it's been interesting. The Wall Street Journal was talking about how Citadel, did you and I talk about this, Mike? Mark, I think it was maybe on an option block. Citadel released this information that they were, they were providing way better markets on SPX now that it was electronic. They were improving markets by a penny. And
I haven't seen that. They're stepping in front of blocks for a penny. That kind of stuff.
They're stepping in front of giant blocks for a penny. So if you want to know why the volume sucks, there's a concentrated effort by some of the market making firms to bring things over the counter and or move things into SPY or to penny them. Meanwhile, get as much of this little tiny retail flow that they want to fill. Meanwhile, any of the middling stuff can't get anything done. So if you're wondering where all this volume is, is that in the SPX pit, and John, and this is really what I think is the one value of open outcry, the true value. And John, who now works for an all electronics exchange, even he may admit to this, is that it's very difficult on electronic exchange for John. You were SIBO, right?
I was a SIBO, right? And I traded in the SPX.
All right, so it's very difficult for I don't know. Let's say I'm trying to think of a good broker. All right, so Kevin, Rat. All right, so Rat needs to get something done, and it's super middling and it stinks. And there's not a lot of edge in it. You wouldn't normally do it, and he says, "Hey, can you please help me with this?" And, everybody kind of shakes their head and says, this sucks. But, it's not something that's going to run you over. It's not terrible. And you guys say, okay, we'll help this guy out because at some point in time, there'll be an opportunity for him to get us back. And all of this middling paper that brokers do that, fits against, either positions or things like that just isn't getting done. It's just sitting in the wasteland, especially outside of in longer dated stuff, backdated stuff, or it's just not getting done. And why? Well, all these block trades that are good that, would get split, that these little guys are willing to do, mid-market stuff is getting, front ran or not going up or going over the counter. So you've got kind of the SPX kind of being gone ravaged. So the SIBO is counting the days to get the SPX back open. And you're right, SPY's done a great job of picking up the stuff that's staying exchange traded, but a lot of the volume that has disappeared from, if you add up the missing the volume SPY's picked up and subtract that from the volume the SPX has lost, it's gone. It does not add up to you don't get zero, and the reason why is a bunch of that's gone over the counter, which is I don't think is good for anybody. Over the counter serves a purpose. But especially on stuff that can be exchange listed, the more clarity, the more stuff trades on an exchange where we're able to see it, where it's exposed to the world, the better it is for the customer, the better it is for the brokers, the better it is for the trading world, the better it is for the real markets. So, I think that is twofold, right? We want the VIX back to 15, and I think it's better for everybody if the SPX gets open.
Yeah, well, that got pushed, unfortunately. It was supposed to be, I believe, June 8th here, the SIBO getting back to business on the SPX, and that's got pushed, obviously, by not exactly a time when we have National Guard troops deployed around the loop here. Not exactly a time you want to bring a bunch of people back into the loop to deploy on the trading pit, so that got sensibly pushed another week to, I believe, June 15th is the latest date we have, so we should be able to see hopefully soon what impact that has on some of these large, complex orders that typically like to go up in products like the S. And hopefully we'll see return of some of that. If it makes you happy, though, Mark, I did see most recent news just in the last day or so from Citadel. Ken Griffin did spend $100 million on a painting. So if that makes you happy, he's putting his pennying to good work, sir.
Yeah, great job. What an awesome dude, right? I mean, could anything be more clear in terms of, when people see a disconnect between, and I don't want to go on a big, long social justice talk, but when people see a disconnect, you want to see disconnect. It's, 20% unemployment, 13% unemployment, and the richest man in Illinois is spending $100 million on a painting.
Now, it'll make you feel better. It was a black artist, so there you go. That's how he's showing his support.
If that's the case, then never mind.
Rather than,
I'm sorry.
Putting that maybe towards...
that back, Kenny boy.
Exactly. Maybe instead of putting that towards the cause. And we don't want to get political on the show, but if you want to put that money to work in other ways, possibly could be. But hey, $100 million on a painting. Man's got to grow his art collection somehow. Let's keep on rolling into our VIX Futures collection, see what's been going on out there. By the way, more interesting numbers coming out of OCC. We talked about it on the option block last episode, actually, just yesterday, about what's been going up out there. Obviously, May was yet another historic month for overall options volume, and the ADV is just skyrocketing. It's up 40-odd%, I believe, from this time last year. Yet the one kind of dark spot yet again out there are the volatility futures, the VIX futures. Obviously, Spike's futures still halted. I believe we have a listener question about that, so we'll get to that in a little bit. But the VIX futures are anemic, 62, almost 63% decrease from May of last year. May of 2019 wasn't exactly a rock'em sock'em robots month, and usually May, traditionally, historically, is not a very active month for volatility. So the fact that we are well below last year's levels, it is interesting. You'd think there'd be a little bit more demand over there for VIX futures than there has turned out to be. Obviously, something systemically is causing this. XIV has been gone for a while, so that shouldn't be really playing a part in this, but something is driving a lot less volume out there. Something is not rebalancing anywhere near as much. A lot of levered ETPs did go the way of the dodo. Maybe in aggregate, some of that is starting to be felt in the VIX futures numbers. Either way, come into showtime, we saw, like I said, the cash was right around 24.5. We saw the June future about a little more than half of a point above that, about 0.6 of a point north of that. Then we saw going out to July, not quite 3 points, about 2.8 point distance between the July future and the cash. Mr. Meatball, are you surprised that yet again the VIX futures numbers were pretty anemic coming out of OCC? And then B, what are your thoughts on how the curve is shaping up right now, sir?
Yeah, I mean, you're starting to get a real steep contango. You're starting to see, I mean, we still have that weird hitch, right, from elections in October, but you're starting to see the rest of the curve pretty much normalize. And, most of my option pit traffic light for volatility is pretty much a red light. The only piece that's, kind of yellow, if you will, is that, today's uptick in realized volatility is going to throw off my my implied to realized ratio that I like to keep an eye on. But I mean, it's pretty much you look at everything, right? And that VIX curve, you're going to start seeing some curve traders step in and trading it. I think you're going to see when October becomes the front month, I think you're going to see a lot of activity around that. And I think that when we start to see the spikes and the VIX back to 13, 14, 15, you're going to see the funds that are using VIX to hedge step in and start using it again. You'll also see some more interest in some of the ETPs starting to trade it, right? That'll step up as well. So I think that, we currently the volatility space is a victim of its own success in that people were using a lot of it. They made a lot of money, and now they're waiting for it to come back, and not throwing good money after bad as volatility backs off.
Yeah, and I mentioned the futures on spikes. I mentioned listener question. Let's just cheat and bump it up now, John, because I'm kind of curious. You kind of touched on this earlier, but let's make it official. This comes from R. Ryan. He wants to know, what is the latest on spikes futures? Oh, he's already adopting your nomenclature here, Mr. Meatball, and the Viking index. I'm not sure if the latter portion of that is actually official, and maybe John can speak to that. But John, give us a little bit of an update. Obviously, these are challenging times to get new products approved in D.C. There might be other competing priorities down there right now. But give us, our Ryan and the rest of our listeners, a bit of an update on Spikes futures. And if you have something to share on Viking, have at it, sir.
Nothing on Viking. I can say that the process is you're dealing with two of the strongest regulators in the world. They're working the process through, and we're comfortable and confident in our position, and we think that our regulators are going to treat us fairly. And,
has anybody ever asked why there's a CFTC and an SEC instead of just one organization? Just wondering.
Oh, that's been a long-standing.
That was a total joke. That's been a
long-standing debate. We can get into that if you have several hours, sir.
That was a joke. Yeah. Everybody.
How's everyone the week of July 1st? How's that look?
I think our friends over there at CME just ducked for cover the second you even mentioned merging the idea of regulators out there. But yeah, so it sounds like so John, you get the sense then that you can still get stuff done in DC. It's not all completely shut down, not just for the pandemic, but now for all of the unrest going on. You can still get some stuff done down there, John?
No, I think the people at MIAX that deal with the commission every day, they're very impressed with what's going on with our regulators. They are people too. They're dealing with the same trials and tribulations as everyone else, and they're doing an outstanding job. It's a tough job, and even in normal circumstances, even in 15 vol circumstances, and but they're. I think, from my take as someone that's been in the industry a while, I'm very, very pleased with how well they're doing.
Let's see how well the volatility option side is doing. We kind of mentioned the Spikes futures still kind of waiting for approval. So Spikes options pretty similar to what we saw last week. The big positions out there. Number 1 are the June 95s. Number 2, July 24s. Number 3, June 75s. And then number 4, still my favorite, still brings a smile to my face, are these July pars that are still open out there. Let's move on out to VIX options land. Decent paper actually on the day, which you might expect given the fact that we're roaring back to the stratosphere. S&P up nearly 3% here on the day. The ADV is pretty close to unched from where it was last show, right around 356,000 contracts or so. So a couple, give or take a few thousand from last week. And today we're closing in on that already, about 318,000 on the tape as of a few minutes ago. Let's break down the top 10 hot positions out here in VIX options land. Doesn't cost you much to break into the top 10 these days. A lot of contracts have obviously rolled off the board, even though the net OI is fairly strong out there. Costs you about 92, almost 93,000 contracts to break into the top 10. That gets you to the June 37 halves. Number 9, 93,000 as well, almost 94,000 of the June 35s. Then we go to the put side. Number 8, about 98,000 of the July 25 puts. There's one other July on the list here as well. Number 7, we got about 100K of the June 25 puts. Then we go even more puts. Number 6, 101,000 of the June 20 puts. Then back to the upside, back to calls. $1.11, almost 112,000 of the June 30 calls. Number 4, $1.14 of the July 28 calls, the second and final July on our list. Number 3, 118,000 of the June 15 puts. And that's it for puts. The rest is all calls. Number 2, $1.21 of the June 80 calls. And number 1 with a bullet out here this week, a pretty anemic 129,000 of the June 50 calls. And usually it costs you about that much to break into the top 10. Yet that's the number 1 spot out there. It kind of shows maybe a little bit of the disparate nature of opinion out there in the vol space right now. People are playing on a bunch of different strikes because the OI is still pretty firm. It's about 7.1 million contracts open, about 3.7 million on the calls, and about 3.4 million on the puts. So it's a decent amount of OI, not 10 million or more, but it's pretty strong, and yet only cost you about $1.29 to top the list out there in VIX land this week. Before I start parsing the days here, Mr. Meatball, any trades or trends come across your radar this week that resonated to you or to the crazies in your trading legion / pit chat, sir?
Yeah, there was more on like XX than there was in VIX itself. But VIX, we are seeing, to have the July 25s and some puts in that top 10. Normally, that, and I know this sounds crazy, but when 20 to 30% of the top 10 are puts, that's usually that's a pretty bearish sign for volatility, and shows that there are some pretty big bets on vol backing off, and we're seeing some of that. Now the question is, when do the 20s start to come into the picture in terms of puts, and how does that trade and price itself? I love those July pars. The one anecdotal thing I'll point out was that, I know in like mid-March, I pointed out that you could put on the July 75 par 1x2, long 1, short 2, and get like a 50-cent credit out of that trade. And for a period of time, that trade got really scary as TVIX was blowing up to $5 billion, and then it kind of backed off. So pretty interesting times. I gotta say that when the pars are in the top 10, one more new indicator I just came up with. So when the pars are in the top 10 open interest, that is a counter trend bull bull flag to go along the market.
There you go. That's the indicator that we need out there. I think the indicator was last week. Russell even said it when he was on the show. He came out and said he was a little spooked by the term structure, and he was completely in cash, which he said was going to instantly be the indicator that was going to turn the market to the upside. And it turns out he was indeed correct, even though I don't think even he could have prognosticated the ridiculous explosion of the jobless numbers we saw out here today. Let's look at the quote-unquote explosion of activity, which was pretty anemic most of the week. I said today was about 318,000 contracts on the tape coming into showtime. About 32,000 of the June 24 puts was the big print out there, followed by about 26, almost 27,000 of the June 20 puts out there. Yesterday, another pretty light day, 241,000 contracts on the tape. The big prints, couple of 15,000 lots of the June 21 puts and the June 20 puts, as well as looks like the June 22 puts for about 13,600. So maybe a bit of a funky roll / three-way going up out there. Wednesday looks like it was the most active day of the week. Not quite 500,000 contracts, about 464,000 contracts on the tape. Big prints, again, kind of a broken record in the put side. The June 30 puts, 32,000 of those, followed by about 31,000 of the June 21 puts. Maybe a bit of a vertical going up there as well. 25,000 of the June 30 calls. So there were some calls on the tape, as well as about 18,000 of the June 65 calls. So some funky, and those were lifting offers out there. So maybe not everyone out there thinking perhaps the worst is behind us. Maybe that's Russell coming on in and making himself heard on the 65 strike out there. Tuesday, 381,000 contracts on the tape. The big print, nearly 50,000 of the June 25 puts. So that's kind of been the theme. The 20 range strike puts this week are kind of dominating the tape. 47,000 of those going up on Tuesday, followed by about 21,000 of the July 23 puts. And Monday, pretty anemic, a little over 200,000 contracts on the tape. The biggest print, actually, the June 75 calls, going up for 24,000 times, right in the middle of the market up there. So I don't know if they were lifting offers or just dumping out of some calls saying, gotta get the heck out of Dodge. I'll have to go see what those 75s are trading for. I can't imagine if you're dumping those, you're getting a heck of a lot for those right now. But what is getting a heck of a lot, at least a movement to the downside, is the aforementioned by the meatball Double X, a.k.a. VXX, a.k.a. the product most of you like to fade, didn't really until this week, didn't really want to play ball. In fact, we talked last week about a pretty sizable roll that went up out there, how that guy had done pretty well in the past. This time, not so much. Oh, if he had just waited a week, he rolled, I believe, the July 35 puts, about 100,000 of them out to about 100,000 of this AUG 30 22 puts. Right, he's still doing all right, obviously. We'll get to where it is right now. But still, if he had just waited a week on those June 35 puts, how that trade would have looked a little better. Of course, hindsight always 20/20. Right now, coming into showtime, we saw VXX right around a 29 handle. It puts it down about 6 handles. So all this crazy juice that they've been pricing in out there for months now, finally starting to make sense, finally starting to pay off, seeing some actual movement out there. I'm not sure if it still made sense to naked buy a bunch of premium out there. You had to do some spreads and things, but still, it's starting to get the movement people have been pricing in for some time. 136,000 contracts on the tape coming into showtime. Now ADV was about a little over 200, about 210K. Our buddy Famous Dave out there from Short Vol Show was chiming in. I believe this is yesterday, talking about some paper out in VXX as well. It's a product he likes to watch quite a bit. He said paper sold 9,000 of the June 40 calls. He wasn't sure if it was opening or closing. He also points out he thinks that big 30-22 put buyer may do well on that one. Yeah, that trade's looking all right. We were joking. Obviously, if he had just kept the puts, would have looked even better. But hey, c'est la vie. The man's got to roll when the man's got to roll. Mr. Meatball, you kind of shared with us last week that crazy tubby print of that guy rolling those June 35 puts out here to VXX this week. Anything else lighting up your tape? And you got any more color on that guy? Have at it, sir, out in VXX.
No extra color there. But how about, remember we talked about that big SPX trade where they bought the 3,200 calls outright? What did they buy? Like 15,000 of them? That was a big trade. And, that was the one that I remember we kind of raised our eyes. I think we talked about that on Option Block last week. There was a huge upside call buyer, and he's already made his money. Nice trade, sir. There was some some decent-sized blocks trading around. We've been keeping a real sharp eye on VXX and UVXY as interesting bear trades. I think that with the curve as is and with volatility starting to finally come off, and now that June is going to have to converge with the cash, now that it's starting to get toward expiration, you could see some real decay in VXX. It'd be interesting to see. I know it shouldn't be this way, but it would be interesting to see how VXX moves as its front month future gets closer and closer to expiration. This might be something I put on my, my Greenwood interns. I may have do some research on how these ETPs move with days to expiration in the VIX future / eventually when there's spike futures that whatever ETP that'll, what would we call the spike the spike equivalent of the VXX? SXX probably not a great one.
It gets pretty dicey pretty quick. I'm not 100% certain, but maybe SPK spike, that would be a good one. But we'll get it figured out. Is SPX taken? Can they go that way? How about SPX?
Yeah, no, I think that's taken.
Oh, yeah, I think you're right.
Maybe they go 4-digit and they go SPIK spike like that. And no, you can't say that because that's probably not appropriate either.
It gets dicey. It gets dicey really quick, no matter how you carve it up. Yeah. This will be a challenge for the MIAX marketing department.
Yeah, we'll let the MIAX people work with, volatility shares or whoever comes up with it. I'd really love to see what the return profile is daily with days to expiration in the VIX future and how that relates to contango. Because, now that June is going to have to come off, going to have to converge, I think you could see VXX have a rough week.
Yeah, well, it kind of already had a rough week. I guess it depends what your definition of rough is. If you're like everyone out there has been fading it, including our friend in the put spread, then you're probably happy with it. It's a happy week. But if you were loading up on VXX to the upside, you were looking at what Mr. Rhodes was looking at in the VIX futures last week and getting a little spooked, then perhaps not so much. VXX is a product that can give and can take away with sometimes just aggressive vigor, and this is one of those weeks. So hopefully you're not caught on the wrong side of this one, listeners. Let's see what else is lighting up out here. From an overall earnings vol perspective, not a heck of a lot left on the tape. Most of the season has announced at this point. Coming into this season, it seemed like this was going to be the most rock'em sock'em earnings season of all time because we had no idea, and companies were saying they had no idea what the outlook could be for the future. I've never seen so many large companies effectively shrug their shoulders and say, we don't know. And yet stocks not get hit at all. It's kind of unprecedented. And so coming into this week, we have some kind of the tail end of the season here. We got Dick's Sporting Goods was on Tuesday. Zoom, a lot of people watching them on Tuesday as well. CrowdStrike, their cybersecurity name. Campbell Soup, as well as Slack and Gap. Smuckers for all you jams and jellies aficionados out there. Broadcom. They got Tiffany's on Friday out there as well. You can get all the earnings move results reports for yourself out there. TheOptionsInsider.com. I encourage you, if you do so, check out the earnings season report because it is a bit of a head scratcher. They were underpricing vol already going into the season, and yet it seems like, despite our facts that seemed kind of insane, that seemed to be the smart play because for most of the weeks it was pretty light. Week 1 was about 87, and these numbers change because they keep updating and crunching the numbers additionally over there at ORAT's listeners. And week 1 is about 87%. Week 2, 59%, an anemic 59%. Week 3 is 85%. Week 4 was about 100%. It's been adjusted to about 98% now. And then week 5 was really, at this point, the only outperforming week, 126%. So every other week was coming in under what the market was pricing in from an overall volatility perspective. So I guess light vol was the right way to go. And then, so far, I guess average on the week, on the season, an average is out to about 90%. But still, yeah, this is not what I expected at all coming into it. Again, that shows you just how interesting and surprising sometimes the vol space can be. Let's see how interesting and surprising your questions are as we get into your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to your segment, the Vol Voicemail. You guys have SKEW on the brain, it seems like a lot. Someone asked a similar question on our TWIFO show yesterday. Now they're coming in here to Vol Views with a different person, Samurai 8. Samurai 8, John, this one's right up your alley here. You got to put your product hat on again. He wants to know, are there any plans for a SKEW index on SPY by the Spikes team? Obviously, we know there is the a SKEW index already out there on the SPX. We've kind of talked about it on the show in the past. Don't really touch on it many times because it's kind of a weird beast. It kind of gives you one number. It kind of aggregates the call wing and the put wing. Doesn't really tell you what's going on. It's obtuse nomenclature. It's up to 150. It doesn't really make a heck of a lot of intuitive sense for people who first take a glance at it. That said, John, folks seem like they have SKEW on the brain these days. What do you have to say for Samurai 8 wants to know, are you guys planning anything on the SKEW front in SPY, or I should say in Spikes, in the near future, sir?
We're looking at a bunch of different things, especially as it relates to SKEW, taking some of the things that I found valuable in my previous life. I've been chatting with the product guys at T3 over at Simon's shop, and then obviously the team at MIAX with Shelley, coming out of the trading world. We've always had some good discussions on products and indicators and kind of benchmarks that we think can help the market. And I think down the road you're going to see some things that we're working on, and I think they'll be helpful. Do they ever become tradable? I don't know, but they certainly become usable for people that want to trade better.
Yeah, I think that's a brilliant idea. The big problem with the SKEW index that I said is that it only prints once a day. If it ran constantly, as SKEW is changing, it's telling you all kinds of information. I mean, the movement in SKEW is quite possibly the most valuable thing to a professional trader, a full-time trader. And, the big problem with the SKEW index is that it only updates once a day. And that's because, that way out of the money stuff that it tends to look at is very difficult to get a nice look at. And, taking SPY instead of SPX, where, everything's kind of a penny wide and playing with that, I think would give you a lot of information that is valuable and could be run real time. I don't think that's a bad idea. Normally our listeners have just bad idea after bad idea. I'm kidding. This is a good one.
Many of our listeners also delve into your pit chat there, so watch out, sir. They'll come at you, making comments like that. But yeah, you and I had a similar conversation just yesterday on TWIFO with the equities guys at CME. We had a similar question, and I put that to them as well. And they kind of agreed with you, John, that, it's obvious there is valuable information in that SKEW. So some sort of indicator or index around that would make a heck of a lot of sense. As Mark pointed out, we've joked many times here on the show, the way the SIBO did it with the SKEW index, do not do it that way. That thing has all sorts of things wrong with it. Once a day to start with. I think they've tweaked that a little bit now, but still, it's you have to download a spreadsheet. It's this absurd nomenclature. There's a lot of better ways to do it. So hopefully learn what not to do from that. Whether it makes sense as a tradable product, I don't know. I think the CME folks agreed with that as well, that they thought it was more useful as an indicator because folks can just trade the risk reversals if they want to trade the SKEW. If you're savvy enough to use this, you know that. So that probably maybe lessens some of the demand for the tradable product. But as an indicator, as a useful tool, it's huge. So I think that would be great. So there you go, John. Vote from the audience here for some sort of SKEW coming out of SPY. That would be, I think, very, very interesting to a lot of us. Next up, we got some crazy dude called the Short Vol Show. Never heard of this crazy person. He just wrote in and said, great show on our last one, episode 401. Obviously, that's our buddy, Mr. Lincoln. He lives on YouTube. He does his own show on YouTube. It's not surprising that his comments would come in via YouTube. A lot of you folks liking the tubes these days, so we'll keep putting up with the onerous copyright restrictions on YouTube just for you folks out there. Every time you post a freaking show, we get a copyright flag, and we have to go through all of it. Even though we have all of our music licensed appropriately, there is no way to really upload that effectively into YouTube. So we have to deal with copyright notices every single time you post an episode. That's how much we like you folks out there. We deal with that nonsense every time. Clearly a bunch of scammers have figured out they can just make claims on everything and try to snag some ad revenue on things while the process is being adjudicated, and needs some work on the YouTube side, let's just say. We put out millions of other hours of content on every other platform on the planet. Don't have to deal with this, but we do a few thousand hours on YouTube, and there we go. Got to deal with all this nonsense. Scott Sommer, also liking the YouTubes, chiming in on the last episode. Oh, yeah, because Russell on the last show was... For some reason, he was asking if he could come back on episode 420. And our keen-eared listeners, including Scott Sommer, he did the math. And he said, mark your calendars, episode 420 will be on October 9th. So Russell heard that. He was very excited. He said he's already penciling himself in for that episode. So there you go. Russell, if you're listening out there, your calendar has been set for October 9th. I love our listeners. They will actually sit down and do the math and see exactly when that episode. Not that hard of a math this time because it isn't that far away. This is 402, I believe. But still, interesting stuff. We already touched on the Spikes futures here from Ryan. Actually, let's go one more. Since we're talking Spikes, John, let's go one more here. You're getting... Maybe you haven't been on in a while, so your questions have backlogged. I don't know. But you got a bunch of them lining up for you here today, John. So put on your question answering pants. This comes from HIGHLAND. Good handles today, too. I like it. HIGHLAND wants to know, can there be a commodity spikes index like maybe for oil? Obviously, those do exist right now on other volatility products. There is, of course, the OIV. Well, I should say there were. OIV blew up when WTI went negative. So that thing, they still haven't resumed it, which I'm not quite sure why. That negative really just broke everything. I understand they can't do it when it's negative, but it is no longer negative. They could probably resume OIV if they wanted to. Yet for some reason, they're not. OVX, of course, is USO. So there are some flavors of that. John HIGHLAND wants to know, are you got anything similar up your sleeve in Spikes methodology coming soon, sir?
We're looking at how we can apply Spikes and the methodology that Simon's created. We've definitely had conversations internally in the product development side. Where else does it work? Does the methodology work? There are some nuances that we need to kind of work around, some that are being settled in Washington right now. And I think when we get a clearer path, on how you use derivatives in a volatility model like we do and Spike and VIX does, we'll see where it goes. But certainly looking at in the U.S., are there things that trade overseas that we can use what Simon's created? But it is certainly, it's not on a future list. It is on a current list.
There we go. I like it. On a current list. By the way, listeners, OIV still closed. They halted it on May 15th, and they haven't seen fit to relaunch it. It closed at 244.43. And remember, it got even higher than that in all this, all the madness that unfolded out there. So like we said before, some lessons to be learned from how these products have failed that you guys can incorporate in new ones. Let's end it on something fun here. We get, as you might imagine, listeners, we get hit up by different people all the time to try to come on the network in various capacities. Some of them are more outlandish than others. We got a good one here for VolViews. I won't name the guy who's trying to pitch us on this, but he says, "Dear producers, my client is a New York-based matrimonial law attorney." I won't name her either to spare her this. She's available for interviews and analysis on the following divorce stories that pertain to personal finance and entrepreneurship. So, and that what follows is a lengthy CV and all of her resume and everything else like that. Thank you, sir, but I think we're good on the on the matrimonial divorce stories as they pertain to personal finance. Not really the thing for a volatility show. I encourage you, if you are trying to reach out to the show and book yourself, you do a little homework ahead of time of what the shows, all of our shows, are actually about. As we keep on rolling to our final segment, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball, the portion of the show where we all step out onto that precipice of what the heck will vol be for the coming week. And the Rock Lobster has just been flapping his gums and chomping his lips all week long because he thought he was in the bag. And then this last 24 hours really seemed to cement it for him. Let's just break it down here. Coming into showtime, or I should say the end of the show, listeners, VIX and Spikes both shy of that 25 handle, 24.5 or so for Spikes. VIX cash right around a 24.35 or so. So Mr. Rock Lobster taking it. He was at about 25. He seemed a little outlandish there last week. We didn't think maybe that would kick in, but who knew this jobless surprise was lurking in store for us at the end of the week here. Mr. Rhodes was, like we said, he was feeling that vol couldn't move away from 30, so he was staying exactly at 30 and looked okay until it didn't. And I was feeling a little higher at 31, 35. I looked all right briefly, and not so much. never really looked back. So Mr. Meatball, I should say Mr. Rhodes, Mr. Rock Lobster, he takes it. He's about 0.7 away on Spikes, or I should say on VIX, and about 0.5 or so on Spikes. So not a bad shot, not quite a bullseye, but then these are unprecedented times, so we'll count it. Mr. Meatball, you get the afterglow of his victory here because the Rock Lobster is not with us. So I'll allow you to choose. Do you want to go first or pick someone else to go first?
I will. Is John allowed to make a guess or no? I'm not. I forget.
I don't know. Let's find out. John, do you want to make a guess? I know. Your other cohorts like Tom have made guesses in the past, so it's not out of the realm of possibility, sir. If you'd like to play.
Well, clearly Tom's is a guess. Mine is a professional opinion.
I misspoke. I apologize. Have at it, sir.
I think vol's higher from here. I think we enjoy the benefits of this week, and I think people come to their senses. And I see us higher. I don't know. I think we will get back towards the 30 number. You know, I'll go within the week.
All right, a 30 for John. I like having some numbers coming out of the MIAX hot seat. It makes it fun. I knew you wouldn't shy away from a little prognostication there, Mr. Smollen. Now, Mr. Meatball, you want to go next, or you want me to go next?
Well, I'm going next. There's no way you're going next. Let's just be square here.
All right, have at it.
So I think John is right, but I think he's a couple weeks early. I think we're going to see a giant infection spike coming out of millions and millions of people marching closely together for a good cause, but needless to say, not social distancing. And I think you could see a massive increase in the coronavirus over the next, in about 2.5 weeks. And that starts to put the brakes on thing. For now, I think, say what you will, I think the PPP has proven that it was maybe one of the more effective emergency programs that they've ever come up with. So I like us to probably end up around here next week, but maybe a touch lower. I'm going to say 23.
Interesting. I'm with you on the spike of cases, pun intended, out there, because it's watching these massive hordes of people who seem to have no concept of social distancing, and a lot of them not with masks. Doesn't bode well for the future infection rate. You are correct there. All right, so we got 30 on the upside, 23 on the downside. Where shall I find my footing, my purchase out there? I've been leaning a little bit north of late, and last couple of weeks it hasn't exactly worked out. I don't like to keep tilting at that windmill, and like I said, the way things are lining up right now, I could see why we're rallying. Maybe some of this rally was already baked in earlier in the month, but we'll call this a bonus rally out here today. But yeah, I still think there are other shoes to drop. Like I mentioned, there are still armed troops steps from this door as we speak. The people who are out there liquid and in cash, I feel you. I got to be pretty liquid right now myself. I might have to get the heck out of Dodge pretty soon in a very literal sense. So, there's still many other shoes to drop lurking out here. So I'm going to say a little bit higher next week than where we are, but maybe not quite as optimistic as Mr. John. I'm going to say 27. I'm going to say 27 double, 27.55. So John's on the upside, 30, playing the Russell Rhodes role literally exactly this week, going back to 30. Mr. Meatball on the bottom at 23-23, and me coming in the middle there at 27-55. All right. Unfortunately, that music means our journey through the vol space has concluded, at least for this week. But don't worry, we'll be back again next week, kicking it all off again on Monday, unless I can't get access to the building or something. Unless another repeat of last weekend happens here in Chicago. So fingers crossed for none of that. But that aside, we plan to be back broadcasting next week. So we'll have Option Block and all the other good stuff kicking off on Monday all the way through to Vol Views. But before we go, let's go back around the horn. Let's start in the land of MIAX. Mr. John, a lot of interesting topics today. A SKEW index, the futures, a bunch of other stuff popping off. If folks have more questions, they want to reach out to you, or maybe you want to leave them another hint, another tease, where should they go? What should they do, sir?
We have an outstanding website with lots of information that you can access yourself. And obviously at sales@miax.com, if you have questions, it will get to the right people very quickly. We're a lean organization, and our head of sales, Joe Bracco, Shelley, myself, Tom, we'll reach out to you very quickly.
Yeah, so if you're paying attention, John, on this episode, our listeners want the futures, they want a SKEW product, and they want some sort of commodity volatility product. So give those to your product teams, sir, and we'll expect the feedback next week.
We'll have... I've got that right behind the coronavirus vaccine, and we'll turn that out quickly.
There you go. I like it. So a few other priorities in place, and then the commodity vol, and then all the other good stuff there. Mr. Meatball, same question for you. If folks, they want to get access to some of these vol classes and webinars and pit chat and all the other good stuff you have, and these days, who wouldn't? Where should they go? What should they do?
Yeah, so, we do a newsletter that goes out every day. Go to option.com and register. And if you're looking around and wondering, hey, what can I do to make a difference? How can I, from wherever the heck I am, make a difference? I wrote a blog post over last weekend titled How Wall Street Can Help Main Street. I've given it to Mark, and make sure go to our blog, read under the pit report. It's titled How Wall Street Can Help Main Street, and it's a real breakdown on how you can make it. As helpless as you may feel, to make a difference in some of the discord we're seeing. It with very little effort, you can do a lot of good. And I wrote a nice piece on that. I would encourage everybody to go out and read it. And I'll tweet it out, and Mark, I sent you a link to it, and you do with it as you shall.
Yeah, send it to us. We'll repost it. We'll share it. We'll get it all out there. These are times when people are asking, what can they do outside from hunkering down? And hopefully, if you do go out, you socially distance, you take all those precautions, you stay physically safe as well, because these are indeed tumultuous times out there. But yeah, it makes sense. People want to know more about what they can do. Check out. We'll make sure we share Mark's post out there on the site and indeed on all the social medias and all that other good stuff. And on behalf of the Greasy Meatball and Mr. John, and indeed myself, I thank all of you out there for downloading, streaming, subscribing. I mean it. I say it every week. I mean it quite literally this week. Stay safe out there. These are crazy times. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.